Welcome back to the trading den. You can see I have both charts pulled up. This is a new section and this is how you are going to be finding the draw on liquidity. I wanted to make this example right now at the beginning of this video just because it's happening in real time as I'm watching it. You can see how the market in real time engineers liquidity, right? There's no displacement to the downside, but you have these failure swing highs. Right, these failure swing highs, and we probably create another one to come down here into this fair value gap, because understanding the draw on liquidity is old highs and lows and then fair value gaps. This 15-minute fair value gap should be acting as the draw on liquidity for right now. So I just wanted to show you guys how the market is engineering liquidity in real time whenever we have these failure swings. But this video is going to be focused on how you are going to be finding the draw on liquidity. So let's get into that. Now this word right here, displacement, is what I want you to be focused on when you are trying to find the draw on liquidity. It is all based upon how we are displacing above highs and lows and displacing through fair value gaps, because external to internal, whether we have displacement is going to tell you where the next draw becomes if we have just reached an internal or an external level. Now, to find intraday liquidity draws, you're going to be focused on this word right here, right? I only trade the 5 and 15-minute chart for execution, sometimes even the hourly chart. I am focused on speed with displacement in the direction that I am trying to look for. So let's get into the chart, show some real examples in what I mean by displacement. So right here we can have a rough depiction of a trading chart, right? And right here we see our two external liquidity levels, the buy side liquidity and then the sell side liquidity. So now that we have our buy side external and our sell side external, these internal levels, right? I call these highs, these lows, even though on a lower time frame chart they become external levels. I will still use them as partials for the internal levels, right? Because we're in this range, this low, this high. Everything in here is internal range. So let's say that we have this high here, we have this low, and now we have created a new range. With this displacement lower, we want to be looking for an imbalance to show us that we want to go lower. So this is what the market does. We come up to internal liquidity, this fair value gap, and we are engineering this liquidity for whenever we want to go back to this high after we sweep this sell side level, right? We're not displacing really through these lows, right? You see a high, low, we come straight back up, back down, straight back up. Finally, we sweep this sell side level, and this displacement right here we'll leave behind a fair value gap somewhere. We can pull it down, a fair value gap somewhere that you want to be looking for after we just swept these levels, right? We just swept two buy side levels, so we want to be looking for this internal liquidity to send us to the external level. So we come down, draw into internal liquidity. Now we want to be focused on this buy side level, because why? Well, this becomes a low resistance liquidity run. We have engineered liquidity to send us to this high and then eventually come to this high. So whenever we get displacement out of this fair value gap to run this buy side, that's telling me we want to come to this high, right? So we wait for the setup to show us that. So we make a new high here, displace lower, but remember, we need to be focused on the internal liquidity, which are the fair value gaps. So if we have a fair value gap resting here, we want to be looking for setups on the lower time frame to what? Target this high and then let runners to this high. So we take partials here, let runners up to the external level, we sweep this, notice we still haven't taken this high, and then we come back down to sweep an internal low. So we have swept sell side, no displacement yet, right? So nothing is telling us to get long. We come down and even sweep this low. Now we have displacement. Now it's showing that we want to go to this buy side level. So whenever we have this displacement lower through this low, should be a fair value gap within here to target this low. So we see the reaction on the lower time frames in this fair value gap to send us to the higher time frame low. And then whenever we take that low, displace higher, right? This is telling us that we want to return back to this high. So pull back into a fair value gap, look for the lower time frame setups, to target this high, this high, this high. So then we get an entry somewhere within here, within the leg that is going to be displacing on the lower time frame. The leg that is going to be displacing on the higher time frame, we can get an entry on the lower time frame. And then you see that we take this buy side level. Now, if I flip the chart, it all becomes different. But this turns into sell side. This turns into sell side. This turns into buy side. So buy side liquidity, sell side, sell side. We make a high, come down and return to internal liquidity, create a low resistance liquidity run, and after sweeping that buy side liquidity, we displace lower, showing that the draw becomes this low and eventually that low. Return to internal, displace lower once again, make a internal liquidity right here, take that, take this low. We come up, not really any displacement yet, displace higher, showing us that this could be the draw, maybe even this high, but that's why we wait to see the reaction after displacing through highs. Take the high, no displacement through it, displace lower, internal liquidity to target that level and this level. So let's hop into the charts and show some real examples. So here we are on the hourly chart, right? We are on the hourly NASDAQ chart. And as you see, we have this low right here. So we have a low and we come up to make a high. So now we have our external ranges set for the range that we're going to be trading in. We have this sell side, this buy side. And then we have this move lower, right? But not really much displacement, right? We do have a fair value gap up here. So we have a fair value gap. So we have this move lower, so we want to be focusing on what? The one that's in a discount, so, or a premium, sorry. So this one is in a premium. Notice we close above it. Now our eyes draw to this one. So are we going to disrespect this internal level, or are we going to respect it to head to this low? So on the lower time frames, you can frame a trade right here. Notice on the 5-minute chart, this is that hourly fair value gap. We sweep this level right here. So we sweep buy side liquidity. And notice there is zero displacement above this high. Then we get this displacement lower, fair value gap here, fair value gap here, showing us that the draw becomes that sell side level on the hourly chart. So here can be your entry to target that sell side level on the hourly chart. Notice right here on the hourly chart, we sweep that sell side level. Where do we return? Back into a fair value gap. So now we have displacement on the hourly time frame. So now we have displacement on the hourly. We close above it, but you want to be going to that lower time frame to see when we are going to get displacement lower to target this low. So notice right here we make this move higher. We have displacement. We have this fair value gap right here, but right here we create a bearish fair value gap. So right here, our eyes want to be drawn to this because technically we are in bearish structure, right? We are respecting these bearish fair value gaps. So right here, when we return into this one, we want to go down to that lower time frame to see if we will respect it to go to this low. So let's head to the 5-minute. So here we are on the 5-minute, that hourly fair value gaps right here. And as you see, we come into it and there's not too much displacement. And that's just because it's literally right before market close. It's about an hour before market closes. But you can see that we disrespect all these bullish fair value gaps. And then we return to that sell side level. Right here we have a fair value gap, but that is right at market close. So I wouldn't even be watching that. So we move on to the next day. So notice right here when we sweep that sell side level, we get immediate displacement higher. We create a fair value gap. So we mark this fair value gap out. Notice right here we tap into it. So we would go to the lower time frame to see if we want to return to this high, maybe even this high up here based upon displacement in the market. So let's go down to the 5-minute and see what happened after we reached this. So notice when we tap into that hourly fair value gap, this displacement higher. This is telling us that the market wants to return to this hourly high again. So here can be your entry to target that hourly high. And notice we displace on the lower time frame. We accumulate above this high. So we accumulate turtle soup, we pair orders, and then we displace even higher, showing us that that buy side level on the hourly chart wants to become the draw. So now after this displacement on the 5 minute, it's showing that this hourly high now wants to become the draw, and as you see, we displace heavily through this buy side level. So notice on the hourly chart, we create these fair value gaps above this high. That would show me that this buy side level becomes the draw. But as you notice right here, this is market open. We do not even respect any of these fair value gaps. So let's go to the 5 minute and see what we see. So right here are those two fair value gaps. We'll go over this right now. So right here is market open. Notice there is no speed or displacement through any highs on the 5 minute chart. That's showing you what? That we don't want to go higher. So let's look at the lower 1 hour fair value gap. We displace through that 1 hour fair value gap on the 5 minute chart, showing us that we don't want to respect the bullish PD array. So let's return back to the hourly. Notice we disrespect these fair value gaps, and look at what we create. We create a bearish hourly fair value gap right here on the hourly chart to show that we might want to return back to this low. So here we are on the 5 minute. Notice here's that high for the fair value gap on the hourly chart. We tap into it. No really displacement through any lows yet. Come back into it and displace through all of these lows, fair value gap, and this is market close. But as you see, we return and then gap down through this hourly low. And then do you notice this actually looks exactly how I laid it out. This looks like that chart that rough depiction that I showed you guys, and then we return to that external range low. So now we have set a new range low, and we can get rid of all of this. And now we have an external high and an external low. So notice throughout here, we've created these highs, this high here, and now here we are accumulating, and this displacement higher right here. This is showing us, okay, we may be ready now to return back to this external high. And actually today we did that. So here's this hourly fair value gap. Let's go down to the 5 minute. So here we are on the 5 minute. Right here is that line for the hourly fair value gap. Huge displacement, but notice we turtle soup a low, order pairing in that higher time frame PD array. Huge displacement higher, unicorn entry model. Boom. We run the hourly high, and then we accumulate just under this buy side level. And let's return back to the hourly to see any fair value gaps within here to frame a trade over here. Here's that buy side level on the hourly chart. Here's that huge move lower to get that displacement higher. Notice there's no fair value gaps here, except right here. Here's one, but doesn't really matter because we are so bullish, right? We have returned back to bullish structure. So throughout here, we don't really create any fair value gaps. So it's not showing me we want to return to this buy side level yet. And this right here is the move higher. Now we have a 1 hour fair value gap in real time, and you can go look at what happens after we reach that. But this displacement higher right here is showing me we may want to return to this high, right? We're at all-time highs, so we have limited targets to go off of. But as you see, this right here was literally the depiction that I showed you. So let's look for another example. So here we are on the hourly. We see this old low over here. We can see here we sweep that sell side level. Oops, sorry. Let's hurry up. And what happens immediately after? Displacement higher. Okay, we have fair value gaps here. Let's see if we respect it. So right here, kind of close below it, but it's right at market close. Here's the overnight session. We're focused on the New York session. Huge displacement higher, showing what? That probably we want to return back to this high. So we have this external level all the way up here, and this huge displacement is showing us that we probably are going to want to return back to that high. All these fair value gaps, you want to take your tool, measure it out. Notice we don't even come back to equilibrium. These fair value gaps are showing that smart money is trying to get back to that high quickly. So right here, displace back through a high, hourly fair value gap. This right here would be a setup to take to this high that we just formed on the lower time frames. So notice right here is that huge hourly fair value gap. We are kind of accumulating down here. And whenever we sweep this low here on the NASDAQ, we sweep this low over here. Displacement, speed, up through this high right here. Fair value gap showing us that we want to return to this external level. So this is exactly how you find the draw on liquidity. I don't really use the 4-hour chart that much just because it's such a high time frame, and I'm usually taking entries on the 5-minute chart, but occasionally I will look at this 4-hour chart, but usually I try to find the draw on liquidity that we want to be targeting on this hourly chart, and it's all based upon this speed with this displacement, right? We want to be focused on displacement because the displacement leaves that internal liquidity that price can draw back into after taking highs and lows. So this is exactly how I'm finding the draw. This move right here is showing that we probably are going to want to return back to this high, this high, this high because of this displacement. So you always just want to be focused on displacement in the markets and don't take trades until we get that displacement in the markets. So I hope you can now better understand how I'm finding the draw and how you can too.